Hello, traders. It's 8:01 a.m. Chicago time on Monday, the 17th of August, 2020. This is episode number 1820. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a slight risk on tilt in the markets. The leader today is gold, up $20.80, up 1.07%. The Nasdaq's relatively strong this morning, 92.5 points up, or 0.83% from Friday's settlement. The S&P 500 up almost 16 points, or 0.5%, and the Russell's up 6.7, or 0.43%. The Dow's up 104 points, or 0.37. The laggard today is the dollar. It's off 12.5 cents, trading at 92.96. Euro Stoxx 50 down 1, so lagging there. However, at the same time, we still have safety assets also positive this morning, with the bonds up 15 ticks, the 10-year note up 6.5 big ticks, the FX, the Euro FX up 185 pips, and oil is up 6 cents, the Bund's up 15 cents, and the cable's up 7 pips. It's kind of like allocating to everything this morning. So we just saw a pop higher in the S&Ps, and overall looking like a market that is leaning higher yet again this morning. So that's where we stand today. In terms of earnings, there's really nothing on deck worth talking about, really. We do have JD.com that has reported before the markets came in at 50 cents versus 38 cents expected, so a 31% surprise. And the revenue number was expected at 27.4. 5 came in at 28.45, about a 3%, 3.67% surprise there. In terms of what is on deck on the calendar, really NAHB Housing Market Index, this is a mid-tier figure, expecting 72, got 78. And then the rest of it's just money flows, the net long tick flow and the overall net cap flows in the U.S. Those come out at 4 p.m. today, and that wraps up today. There are UK Eurozone Brexit talks ongoing, and then for the rest of the week, looking at the week, tomorrow we have the building permits and housing starts number from the U.S. We get balance of trade, which is a high tier number from Japan at 750. On Wednesday, the inflation rate out of Great Britain, the energy inventories, the FOMC minutes, and then the loan prime rate out of China. And then on Thursday, we get the GfK consumer confidence out of Great Britain, the inflation rate out of Japan. And then Friday has some the market services manufacturing numbers for Europe and the US, and an existing home sales, and that pretty much wraps up the week. It is a lazy summer week this week. That's the overall expectation, is that's what we've got to tune into. Let's take a look at what was expected on Friday versus what we got. Hopefully you can hear me nice and clear. On Friday, the primary scenario was a push up into the 70, 74, 75 area expected. So that correlates with right there, 74, 75. Expected it to stall out and then have our first impulse back to the open, and then drop to the next key test area, which would have been 33.55.50 for a potential pop. If we did not get a pop, then it's likely to take out this triple bottom at 33.50, a very, very weak low. We again, I said, make sure you mark that area, and then a pop into the close. Here's what the market actually did. This is our accountability portion of the broadcast, in which we look at what we said versus what was done. Uh, the overall action on Friday, very choppy, very low, relatively low volume. And then we finally get an impulse up. We get an impulse up and then consolidate back into the middle of the range, back into the mid. And then we finally break higher, consolidate, and then we finally catch that 73.50 high. And 73.50 high against the 73.74 that was expected. Then I was looking for an impulse down, which we got. This is the push down. This was basically the biggest rotation down before it tested 56. If you recall, I was looking for 55, 50, 56, and then a pop into the close. Again, in case you forgot, this is what we're looking for. 74, 73, 74, impulse down, 55, 50. This figure right here, 55.50 for a pop higher. If it doesn't hold, then it's likely to take out this low for a pop higher into the close. So basically, the play on Friday was spot on, but again, that doesn't make it easy to trade. It was very slow and a very boring trade. But I'm sounding like Kudlow. But here's this nice climb in the delta as prices went down. There was some lifting of the offer on the way down, bringing us back, and then that resulted in us coming back into the value area, the developing value area, and holding steady. The Friday value area was completely, this is the blue, right? This is the blue line right here. That's value high, value low, was completely inside of the prior day's value area. It's Friday has to be seen as a balancing for a strong potential for higher. We are not. We didn't do very much of we didn't put in much of an effort on Friday to move value lower. Sellers were too weak to make anything happen to the downside. And so we either consolidate or we push higher today, and it looks like we are pushing higher. We are gapping up above Friday's range and into Thursday's high volume node. That's what we're doing this morning. Those are facts. So the fact that we pushed this delta higher on a balance says that it's very likely to turn higher. It's not always, it's not easy to know the intentions of participants, but it does, just understanding that this has happened, we are now tuned to the fact that we are likely to see something happen, right? So that's the goal for today. So that's what we're looking at. The overnight session has had 153,000 contracts. This is a full session chart. The orange profile is full session. You can see the kind of legend right here. The orange is full session, the blue is RTH only, and you can see that when you're looking at the full session, you got boom, 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 and then today's session. What does that look like to you, folks? For those of you who've been monitoring the volume profile for a while, what does this say here? And just remember, we just made new all-time highs last week. What is this saying? What do you think this is saying? So since there's a 15-second delay, I'm not going to wait for your answer because that would be really boring because then you just have a quiet gap. Um, what this is saying is we have a market that has not finished exploring prices higher. How do we know this? We know this because we don't have an excess. We have not pushed prices to a point where the market is saying, whoa, 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 whoa. These prices are too high. I'm going to sell the crap out of this thing. It has not happened yet, and so what we have is a market that is leaning against the high and putting in what is an overall weak high. So we are expecting the all-time high to be taken out. We've tested the all-time high quite a bit, 82.5, 82. So let's outline this. 82.5, 82, and then we had a ton of icebergs and battle here at the 79.80, which we are basically at again. We're coming at the 79.80, which was a huge fight last week, by the way. A lot on the offer. And if I showed you Bookmap, this is quite relevant and timely. If I showed you Bookmap, you could see there's still liquidity here. There was quite a bit that traded up here last week. A lot traded up here last week. We put in quite a few week highs up here and sold off. So back to our review, this is where this sell-off came from. We tested and tested and tested and tested, and then gave it up, and it was a very fast drop here. And then during the day session there, and then we are at this area, and this is likely to push through and really push prices higher. Why? Because it has already advertised prices down as far down as 33.50 and has found buyers. So the market has done its thing, right? If you follow the story, we push higher. Nope, not interested. Comes down, advertises prices lower. Okay, buyers come in. Still not strong buying interest. So we end up pushing, rotating and pushing lower towards 33.40 or lower. And then we come all the way back, Look at where we came from here. Let me squish the scale. We come all the way back, 80 point, about 60 points or so. Come all the way back, consolidate, try again, and then we advertise prices lower yet again, 33.57.50. We try again in the overnight session. We advertise prices lower at 33.50. We try again with a weaker high on Friday, and we ended up with a double top here at 73.50 on the profile. We advertise prices down to 56, expecting 55. Remember this number here, 55. That was the low of Friday, basically. And then we are back here. So we have tried to advertise lower multiple times, and the market keeps coming back. And what this is saying is the participants are seeing good value at these upper prices. And so now we're looking for it to push through these minor projected levels at 85 and a quarter, 91 for a push to 96. That's the key target above. And there's quite a bit of energy up here. Much volume. This is a profile that's representing all the volume that's gone into this region. And so you could see there's quite a bit that's kind of sitting up here. That's sitting up here and waiting against the high with multiple tops that have been tested here in the 80-ish, 82-ish area, and we are back up here. So this is really a market that has moved up against the 80, 82 and has done this. What do you expect? You expect this. That's what we would expect. We would expect this to accumulate into a very sharp volume profile and then to extend that profile up. And that's what we're seeing here. This is happening in front of you live. And so this is what we've got for today. And that explains some of the accumulation on Friday. It's a pretty low risk, high probability bet to buy the dip on Friday into today, in my opinion. So that's where we stand. Again, the overall liquidity picture as I extend my my platform out, you can see that there's liquidity, that standing liquidity at the 80. We see a liquidity at 85, which happens to be our measured move. Next measured move up we have is in the 91 area, which has liquidity. These are all coincidences, really. And then the next stock zone I have up here happens to have liquidity as well, and that's based on a measured move as well. Again, that's a coincidence, like coincidence, 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 coincidence. So that's where we stand. I mean, if I go out as far as I want, we see that the key areas 96, 91, 90, 85, 80, and then of course the century figure of 400, and these are all-time high figures up here, with very little sitting down below, very little resting down below in the heat map. Very important to note that this is the case. The Nasdaq's not very far from its all-time high. Also, it is about 50 points away. It's about 50 points away, and can do that in about 2.5 rotations. So the Nasdaq doesn't have to move very far in order to see new all-time highs along with the S&Ps. Okay, so let's move into what's expected for today. For today, I'm looking for the overnight inventory on as of the session is 100% long, and has tested the week high from Friday at 73.50, has now pushed into the 79.80 area. The expectation as we open this morning, the expectation is a very minor pullback. I would expect the extent of the pullback from Friday will be about 73.5, 74 for a push, and I expect a spike higher as we push through the all-time high into the 85 area, consolidate, squeeze into the 91 area, and probably rest at that point. That's plenty of range to the buy side for this product, especially for an August Monday. It could push as far out as 96, giving us about 23 points of range, but I'm not really expecting it. The close to close sigma extent is about 23 points. That is what's normal. That's the edge of what's normal currently based on 20-day historical volatility. That's close to close. So that gives us a little bit of range to play with. But overall, I'm expecting this to not push very far today. The secondary is an open auction that pushes into the 85, consolidates for a while, falters, rebalances back to the 73 area or so, consolidates and holds up here, shifting the value area higher, the point of control higher, and setting us up for a Tuesday push next. Okay, so that's where we stand. Remember, my charts may look different than yours. The all-time high is 33.8250. And if your charts are doing something else, then what's happened there is very likely that your charts do not equalize expirations. If you don't equalize expirations, it means that your data has fake or non-existent gaps in it as a result of rollover. Rollover shouldn't have a gap. It should be equalized. And so it should go back as far as your data shows up. It should equalize the contracts back so they're represented in the September contract. It represents all of the prior expirations in a September contract. So if you have, there's been a lot of talk of 97.5 being the all-time high. That is not true. If you equalize the continuous contract, you would have the all-time high being made last week right here. So good luck, everyone, and I'll catch you tomorrow. Hopefully you're gaining something every day. And of course, don't forget to subscribe to this channel. Of course, if you don't need to do that, if you're already subscribed, then of course, hit the like button whenever you feel like it. It sure helps out. Take care.